Welcome everybody. It is Mark Coe for Thursday. I got that messed up. Thursday, 16th of March. Wanted to talk to you a little bit today about a trader's thoughts. And we're post FOMC, so FOMC raised rates yesterday, third time in 11 years. And we're first day after that. So I wanted to kind of look at traders' thought movement and volatility yesterday to end the day. And so my thought process from a standpoint of a trader looking for something on a daily basis, meaning I've got to capture this move today. My thought process becomes one of saying we saw a lot of reversals of movement up to the Fed. So the movement up into the Fed was one of a stronger dollar, more of a sideways equities market, and lower oil, lower gold, lower commodities. That's kind of what we'd seen. That was reversed. A lot of things did well yesterday on FOMC day, but the dollar did not do well. So dollar was not exactly at levels that would have been unbelievable to jump in. I tried some dollar longs yesterday afternoon and wasn't rewarded. But what my thought process starts to become is, okay, where can I go that should give me some volatility to be able to trade, but something that would make some sense? And so, one of the markets I cover quite frequently is crude oil. Crude oil had some interest here for me today, and I'll show you why. Crude oil, from more of a couple day to a couple week looking setting, had some levels that made sense from the trends that have been going on. So crude oil, after several months of sideways action, finally broke lower last week. And I want to point out the levels that it broke from. Right? So this was the range that it broke out of above 52. This is what's capped it on the top side, 50.75-ish, 50.80. This was the next level on top, 49.75, 49.80. You see some wicks extend up to 50.15. But the bulk of the trade occurs underneath 49.80. So that was the level coming into focus today. So I want to show you why this made some sense and why I thought there was some opportunity down here. Now, there were two ways that I thought there was tradable opportunity on a shorter term basis within crude without taking any long-term opinions, just to stay within the range. And I felt like ranges were really at play here. So this range that I'm focusing on came from yesterday's bottom edge. Yesterday was crude oil inventory. We tested that level, but we held it. So to me, that 49.35 was 48.35 in crude oil was very tradable if you got a dip down there. The reason top edge made a ton of sense, and see if you can follow these trader thoughts with me. And remember, I have my trader hat on here, so I'm thinking, where can I find opportunity? This level from the 10th of March, so last Friday, right? The market tried that 50-15 again, it failed yet again. This served as the initiation of the breakdown that took us to the lows this week, but have maintained all week long. So in the approach into that last night, I happened to have some long trade into that and didn't get them off right at the top, but a little shy of that, I was able to take profit. What made sense to me then today was to look at two things. If crude was going to be really strong, to have an opportunity to sell into this, and if not, to have an opportunity to hopefully buy something down bottom edge. So let's look at kind of how the day unfolded, knowing that that was more the couple day outlook in crude, and see how it played out. So here's the level I was talking about last night where I was able to take some profits in crude. I did not get the highs on my profits. I got above 40 but shy of 50. We kind of stalled at 50. So that's where I was able to get some profit off. Now follow me here on a shorter term outlook and just watch what the market's doing. Now realizing the market had a lot of sell interest up here, so I was very focused on that area if we were to trade into it. Market did not trade into it, fell shy of it. But watch what happens shy of that level. So you get a high. You don't know if this is the daily high. You don't know if it's an intermediate high. You don't know what it is when it forms. But once you start seeing this action, once you start seeing these lower highs be put in, do you see the pattern that's developing? High, lower high, lower high. So what it's creating is some type of opportunity to look for longs at this edge. Now this was the short-term trader in me coming back to the same spot that I played it last night. And look at that trade. Right from that same edge. Now here's where you have to use your shorter term mentality and say, okay, well, if that rotated right off of 11 and failed to come back to even just the last edge, what is the likely next movement? Well, it's likely a breakthrough bottom edge. That's what's likely. Doesn't mean it has to happen, but that's how I position. So once that falls through, I'm just off the trade here for a minute. I'm just off for a bit. But in looking at yesterday's action, there was an auction that took place post FOMC right in this section. Right in there. Do you guys see that auction? It was late afternoon. So if you carry that forward to today, what it serves for me was a look in here to be able to look at potential trade area. Now, nothing really developed right in there, so off that area. But what started to make some sense was the congestion yesterday, right? So you really take it level to level to level. And when you start to break it down from congestion area, right? So you're looking at these spots, doesn't develop. You then take your focus to the next area, which what develops down here? What develops down here? You start to see some bottom edge action. And this actually became quite tradable in the short term. It became quite tradable. So I managed to be able to pick up some long side, and there was not a phenomenal opportunity that I would point to in this section, but it just became very tradable range. And that's all that was there today. So I was quite content to look at it from a range standpoint, understanding bigger picture. There was a lot of buying in here yesterday. There was a lot of buying. It drove it higher. Even bigger picture, there was a lot of selling up here. And so to me, it really mapped out the idea of a range trade. And so from a comfort zone, yeah, I probably tend to look at crude oil as much as any market on a shorter term. But I think that's what makes the most sense. You get pretty intimate with a market, and rather than force a trade, you start to formulate ideas, especially in the short term, and say, well, if crude were a sell market up here, on any approach in there, could I look to get short if we fail to rotate the highs? Yeah, you can look. If crude were bought up for the last 2 days right from this zone, could I start to look for bottom edge longs? Yeah, you could. And that's where it's important on days like today's to be patient for good levels. There were times today where I was more aggressive and wasn't rewarded, and I would pay a quick stop. And there was times today I was very patient and got absolute best levels. So I think understanding that you have to be comfortable with the risk that you're looking to put on, and as long as you're willing to handle that risk, it works for me. But be smart about the levels that you're looking to deal on, and realize that there are going to be opportunities to deal at really solid levels, and there are going to be times where you're forced with the decision of don't trade because the level's not really strong, but it could be short term. And I get that from a short term trader standpoint. I get the desire and the willingness to deal. What we're trying to focus on is how to do that in the best shape possible. So just a few traders' thoughts for Thursday. I got that correct this time. Thursday, 16th of March. Crude oil. If you guys have any suggestions, if you like the videos, if there's any topic you want to hear covered, go ahead and send it in. Put it on the YouTube. You can shoot me an email, and I'd be happy to cover any topic you guys want to hear about. So keep up the good trades. Chat with you all soon. Cheers.